Hi guys. Hi everyone. As you can see today's topic, we will talk about Elliott wave today. So actually they're gonna have like 3 parts. And today I will just maybe cover introduction a little bit, touch on the Elliott wave. Okay, and then I think part 2 we can practice together. And I saw the wave in gold and BTC. I will use that for example later. Okay. Okay, so till we just begin our session, so I don't want to keep you guys waiting. Again, good morning, good afternoon, good evening, wherever you are. Welcome to Vantage webinars. Okay, it's 3 p.m. over here in Singapore. Okay, so before I start the webinar, disclaimer first. All right, everything in this video is purely educational in nature. Nothing should be considered as investment recommendation. All right, and risk warning. Over here, trading forex and CFD carries significant risk and is not suitable for all investors. Okay, and about myself, I think I forgot to remove this on, but it's okay. My name is Peggy. I'm an investment analyst and a prop trader. Okay, a prop firm or proprietary trader. So basically, just a quick share with you guys. You need to pass all the challenge and like you follow the rule, and then they will give you the capital to manage. Okay, it's just some of the certificate that I have passed, but actually I just forgot to remove because it's been some time already. Okay, and okay, from Hungary at 9 a.m. here. Okay. That is quite early. Okay. Yeah, the question is direct to you. And the agenda for today, we're going to cover what is Elliott wave, what are impulsive wave, what are collective wave, unbreakable rules, important wave guidelines. Okay, so we heard about Elliott wave before, and a lot of people that will trade forex or others asset, they are using Elliott wave. But again, guys, if you want to master Elliott wave, you need to have time to look into the past, and then you count the wave. You can't just count the wave at the current market. You need to look back and then you count the wave, which I will show you guys later. And for the wave theory, we know that it developed by Ralph Nash Elliott in late 1920s. He noted repetitive pattern in the market, which he attributed to psychologies of masses. He divided those last patterns in smaller patterns, which he called waves. Each transaction is both produced by meaningful information and produce meaningful information. The wave principle is not primarily or focusing to, it is a detailed description of how markets behave. And in the wave, we have two kinds of wave. We have motive wave and collective wave. What about the motive wave? Okay, the motive wave is the first wave half a complete Elliott wave cycle. Okay, this is a wave. It will look like that. Wave 1, wave 2, wave 3, wave 4, wave 5. Okay, and it advances in the direction of the trend of one larger degree, and it is subdivided into smaller waves. Okay, 3 of those waves, which is labeled in 1, 3, and 5, we call impulsive wave or actionary wave. Those you will see labeled in 2 and 4 is a collective wave or the pullback. Okay, so basically wave 1, 3, and 5 is a follow the trend. Okay, and wave 4, wave 2 and 4 is a pullback. Okay, basically. And the motive wave rule is that this one you need to remember. They will say that wave 2, which is wave 2, can not retrace more than 100% of wave 1. So this is the beginning of wave 1. So wave 2 cannot go below the beginning of wave 1. Okay, and they will say that wave 3 can never be the shortest of wave 1, 3, and 5. 1, 3, and 5. So wave 3 will never be the shortest. Okay, and wave 4, they will say that can never overlap wave 1. They cannot go below wave 1. Okay, those these are unbreakable rules that you need to remember. Okay, they say that wave 2 cannot go below the beginning of wave 1, and wave 3 cannot be a tortoise of the wave 1, 3, and 5, and wave 4 cannot overlap wave 1. So cannot go like below. Okay, that's the rule that you need to remember, which is I will show you in the charts. Where is my trading view? Maybe right here. Okay, maybe right here. Remember, I will say that for the Elliott wave, in the trading view, they have the over here. Okay, we can say wave 1, wave 2, wave 3. They say that wave 4 cannot overlap wave 1, right? Maybe to be pulled back somewhere around here and then continue to go wave 5. It will look something like that. Okay, this is gold. So of course, in the future, gold will getting more expensive. So I think this might be the end of wave 3. You might see the pullback. If I were to count this one at wave Elliott wave, okay, this is maybe I make slightly bigger. Okay, and remember that the rule is that wave 2, okay, not go below the beginning of wave 1. This is correct, and this is wave 3. Then we might forecast that this is going to be like wave 4 pullback, and then wave 5. Okay, this is how it wave look like. And the collective wave actually is a pullback. This is a pullback. They said that collective wave is the second half, a complete Elliott wave cycle. Collective wave move against the trend of the one larger degree. Collective wave is subdivided into 3 smaller waves by letter A, B, C. So we look like that. A, B, C. Okay. This is their cycle, gonna be like that. Wave, motive wave, we have 1, 2, 3, 4, 5, and then we have A, B, C. So you want to draw this, gonna be the wave 1, it's gonna be the wave 2, okay, and continue to go wave 3, wave 4, and wave 5. Okay, remember that they said that in wave 1, then we have a subdivider into 5 waves. So this is going to be like 1, 2, 3, 4, 5 equal to wave 1. Wave 2 is a pullback. They're going to call A, B, C. Okay, and we see that for the elevate pattern, they will have phase plus collective phase here. Okay, so the cycle is structured with a total of 8 waves. This completes the elevate wave structures. Okay, the market repeated these 5 structures again and again. Once the cycle ends, it begin again. So I will show you here. Based on gold in money time frame, okay, you will remember that they said that in wave 1, let's just say that in like impulsive wave here, then here the subdivided wave, which is wave 1, 2, 3, 4, 5, right? I might count something like that, I would say. So you get the bigger picture. Maybe I would say I just by the count. I could see this in wave 1, maybe wave 2, wave 3, wave 4, and wave 5. Okay. And the rule is that they say that wave 3, okay, wave 3 cannot be the tortoise among wave 1, 3, and 5. So in this picture, I will change the color. Okay, in this color, you see that to complete wave 3, we have a subdivided wave, and wave 3 is not a shorter because it's still longer than wave 1, so this is okay. And the rule is that wave 2 is not go below the beginning of wave 1. This is correct. This is wave 4 is not overlap wave 1, right? So this is not overlap, so it's just here. And in this case, wave 5, I will call extended wave. Okay, there's a question on which time frame are Elliott wave valid. this is a smaller time frame which it can be seen. Again, Elliott wave, you need to count in the past. Okay, then you keep counting. You can't just barely count in a smaller time frame. That's why you need to look on a high time frame to forecast. After that, I will go down to weekly. Okay, you can see that within the impulsive wave, they also have the subdivided wave. For example, here within wave 5 here, they also have another wave which you need to count. 1, 2, I will say this 3, 4, and 5. When you want to complete the motive wave or impulsive wave, you need to have subdivided wave, which is 5. Okay, then is I will change the color to this one. You will see that. Okay, and now the pullback. Okay, the pullback, which is wave 2, right? We have wave 2 and wave 4. They will say that wave in wave here it might have like zigzag ABC. So in this case, I just have quickly check. They might have like A and B, just A, maybe from, maybe A, maybe B. No, hang on. That would be maybe it should be C and this should be D. Something like that. Okay. And if I want to zoom in again, I will just remove this one. Okay. It will just keep repeating like that. Okay. I will just change, remove the line. I will go down to the lower time frame. This is D1. Okay, here, maybe I say what, maybe in here I will say that this is a wave 5 and in a wave 5, and within here, you also can count, that will be 1, 2, 3, 4, 5, right? I put the line for you guys to have a look. It's something like that. Okay, it will look like that. If you will go down to even a lower time frame to look for the, oh, sorry, H4, okay, within the pullback, let's say this is a wave 3 to 4, they might have like A, B, C, somewhere around here, A, B, C. It's a pullback. Okay, this is the pullback here. And then you can see that to go to like wave 2 to 4, they also have like smaller waves. So it's count like that. That's why you need to have time to look back in the past and then you count the wave. But if you want to like count here, how you're going to count the wave? Unless I want to count the wave like at the current market, I would just say, okay, wave 1, wave 2, wave 3, maybe pull back here and then continue to go wave 5. If you want to count like that, it will look something like that. Okay, maybe wave 5 is going to be somewhere around that. Okay, it will look like that, something like that. You want to count like this. If you were to go down to lower time frame to see like from wave 1 to wave 3, you might see there is a zigzag or ABC. Sometimes you can't find, but it may look like A, B, C, or we go to M30. Yeah, they might see like some like kind of A, B, C, somewhere like pullback. I will look like that. They quite have a pattern, but this is basic how you're going to count the in the web. It look like that. In the picture, you will see like that, right? 1, 2, 3, 4, 5. Okay. Within 1, 2, 3, 4, 5, here you have the subdivided wave 1, 1, 2, maybe 3, 4, and 5 here. It will look like that. And they're also gonna have like what? ABC. This one is gonna have pullback. A, B, and C. And then they're going to repeat again, which is 1, 2, maybe go 3, 4, and 5. And then pull back A, B, C, and then continue to go higher and higher, which is gold. If you were to look at the monthly, I would say this is going to be complete the wave 3, maybe going to be pull back and continue to go higher. Wave 4, maybe somewhere around here, and then continue to go wave 5. It is similar to if I want to just have a quick look on the BTC, right? Based on the monthly time frame, I would just, quickly count on the any wave like either I want to count this on at wave 1, wave 2, wave 3, pull back wave 4 and continue to go wave 5, something like that. And wave 3, I also can see that might be like wave 1, 2, 3, 4, and 5, something like that. Okay. 1, 2, 3, 4, 5. This is A. Then this one would be wave 2 here. We might see the zigzag, which is either called A, B, and C. Okay. I will quick something like that. I will continue. Okay. If you have any question, you can let me know. Okay. Now, repetitive 3-5 structures. What they say that the incorporated expanded wave make a more detailed general Elliott wave structures. 5 advancing wave make up wave 1. Okay. 3 declining wave make up wave 2. So wave 1, 2, 3 is marked up to wave. Remember, I showed you that wave 1. This is a wave 2, 3, 4, 5. Continue. This is a pullback, ABC. Okay. Oof. Sorry. Oh, I need to. And then they will say that in wave 1 and wave 2 of wave 1, it generates 3-5 and the wave structure form. The market repeated this 3-5 structure again when the cycle ends, it begins again. So each wave and cycle can be part of the bigger 3-5 tree. So here, it's always like, so you want to count, this is going to be my wave 1, wave 2, right? Within the wave 1, subdivided wave, I'm gonna have, which is wave 1, 2, 3, 4, 5. Within the wave 1, we also have subdivided wave, which is, you can see that 1, 2, 3, 4, 5, and A, B, C. This is what they call 5-tree structures. Anyone confused? A bigger picture. Okay. One, 2, 3, 4, 5. Okay. Within the impulsive wave or motive wave, actually the same meaning. In wave 1, we also have subdivided wave. We have 1, 2, maybe 3, 4, 5. Change the color. Okay, and then we're gonna have another A, B, C. I change the color to blue. Right here, and then this one continue. We just continue the same like here. 1, 2, 3, 4, 5. And then within the wave 1 here, right here, you're gonna have another 1, 2, 3, 4, 5. What color should I pick? Green. Okay, right? And in the wave 1 or 2 here, you're gonna have an ABC. A, B, C. Choose the red one. Right? You get the picture. It just repeat. That's why it's called 5-tree structures. The same here. This gonna be your A, B, C. Okay, and it's gonna have the 1, 2, 3, 4, and 5. Okay, that's clear. So if I label like that, you can get a bigger picture, just like 1, 2, 3, 4, 5. Okay, so it's a pullback. Whenever you see the wave 4, wave 3 to wave 4, it's a pullback. They're gonna have your ABC. They're gonna have like A, B, C in the lower time frame. You will see like that. Okay, that's why I say if you want to count the wave, let's just say we're gonna count in like look on a higher time frame for like one large degree. I would pick 1, 2, 3, 4, 5. If I want to count like that, okay. And I would say this one will be 1, 2, 3, 4, 5. Okay, let's say if we want to zoom in, we go to weekly. Okay, what in weekly you're gonna see here? Wave 4 here, it will look like it's a pullback, right? It's a kind of a pullback here. It might be look at the pullback. Bad pullback. And wave here, it might be like zigzag. If we want to count like ABC, it might be like A, B, C here. Let we go to D1. Right, D1 it will look something like that. And we continue to count from wave here. Then we have like count the wave, continue to counting, and this one we keep counting. And from here to here, like the wave 5, they might have from here, right? They might like either they will count like one, like A, B, or no, like maybe this could be 1, 2, 3, 4, or sometimes we don't count, but you need to count. Maybe I want to count from 1, 2, 3, no, 1, 2, 3, 4, or maybe 4 here and then 5 there. But the concept it will look like that. Okay, this is just a BTC, but a lot of people are using gold to trade. I will use the gold for example. Maybe here, right? Maybe let's say here. So we're gonna count. I might put wave 1, wave 2, wave 3, wave 4, wave 4, and wave 5. Something like that. Okay. So you were to zoom in here, you may see like zigzag in the lower time frame. Right? We can count here because the rule is that wave 2 is not pullback below the beginning of wave 1. So this is follow the rule. The rule is the most important one. Okay. And there's also another rule for the corrective wave. I think I'm gonna cover next week. Okay. So don't forget to join the webinar. But this is the concept. Okay, this is a concept look like. Right, is my drawing just now. Oh, here. This is the same pictures that you saw in the here. It's the same here. Okay, it was same here. So now I'll move on to the Elliott wave degree. Okay, you will see that this one might get confused, so it will look like that. That's why if you ask me, this very important, it's not very important, because the important is that you know how to count the wave. We did every wave we have 1, 2, 3, 4, 5, and then A, B, C. So this all like, you know, super grand cycle. Sometimes you can just label like that, but to me, not important. Okay, but if you want to like screen captures, this is the way for you to go. But for the wave, you need to have time to look to the past and then you count the wave. You, like I just mentioned, you can't really count right now. For example, for go, if you want to count, this gonna be in H4. You want to say, okay, I think I will look at either wave, like wave 1, wave 2, wave 3, wave 4, wave 5. Okay. Then what about this? This instead with what wave is this? So look back to the past and then you count. Okay. If you were to look here for go, I would think that's gonna be the end of wave 3, and then you see the pullback. Here you're gonna see the pullback and continue to go wave 5. Okay, but based in H4 time frame, it is not wrong, you want to count like that, but most of people who trade in the wave, they're not gonna start to count like that. But even to count like that, that is fine as well. And then you need to look if this completes or if this go below, meaning that this is a wrong wave count, then you need to count again. Okay, if I were to look at the bigger pictures, what do you see here? This is end of wave 3, the big picture, end of wave 3. That's why you kind of see like lower time frame, you will see those kind of like triangle. I think they're making kind of a triangle somewhere around here. This one also considered gonna be like wave 4, maybe a pullback here. Okay, or from there you might see if they break below to complete wave 4, then we need to see again. But wave based on H4 time frame, the bigger picture, we see that they are on a triangle, right? So now we need to see with a triangle, we also have so many patterns. I will cover it next week, but this is just an overall introduction of the Elliott wave. Okay. Okay, let me continue on. So, of course, for the alien wave, we know that you need to use the Fibonacci, okay, level, and this is the, can say the common retracement, okay. They will say that wave 2 will retrace 61.8 of wave 1, the retracement of wave 1. So usually, you will see that you pull here, wave 2 usually will retrace 61.8%. Okay, of wave 1, and wave 2 and wave 3 we call extension of wave 1. It could be up to 261.8, usually 161.8 or 261.8. We call extension. And wave 4 usually will retrace about 38.2 of wave 3 or 50%, but usually it's not more than 50%, because if wave 4 retrace more than 50%, meaning that it's gonna overlap wave 1 already. So actually between 38.2 to 50%. Okay. Then you get a wave 4. Wave 5, how you gonna get the wave 5? Usually wave 5, you can count by the range of wave 1, the distance wave 1, and then you just put here to like forecast wave 5. Which is here. For example, I will take gold for example here. Okay. Let's say 50%. Doesn't mean like wave 2 have to be literate exact or always 61.8%. No, the rule is that wave 2 cannot retrace more than the beginning of wave 1, correct? So in this case, wave 2 here, they retrace 50%. That's okay. Okay, and how we're going to forecast wave 3 is an extension from wave 1 to wave 2 here. And also the extension could be 161.8 or all the way up to 261. They're going to be. Okay. And now I think it's where are they now? Okay. Where am I? This is 261. Okay, you see that? And this is a monthly time frame. So based on the monthly time frame, since April, May, June, July, price it seems like similar to close below the extension 161.8. But this is a month of August. The monthly time frame haven't closed, so we really don't know whether price is gonna close below the extension or close above. Okay, this can be wave 3 or the BTC. You want to see the BTC, you can go that wave 1, retrace slightly below 61.8%. Okay, this is wave 2. And wave 3 here, they're ending with 200%, and then you see the pullback. You can see that. So not exact, all right, 200% extension. That is wave 3, and then that's why you see the pullback right here. Maybe you see right here the investor say that they're gonna sell here BTC because it seems like they're gonna make the divergence here based on the indicator and money time frame. Okay, and then the cycle is that they might think that's gonna be ending of wave 3, then you're gonna see the pullback. For the pullback here, so you can forecast for Elliott wave from the wave 2 to wave 3 here. Okay, they will say that retrace how many percent? 30% around here. So if they retrace 60%, somehow still, you can give it a try somewhere around here because 50% is still almost like the beginning of wave 1. So if 50%, sometimes you will still can it's gonna be wave 4, but they cannot go below here. If below here, meaning that these are not a wave, you need to cancel the wave. Okay, so potentially they might retrace somewhere, anywhere between somewhere here, anywhere between somewhere here for wave 4. Then you can forecast. And then they say that what about wave 5? How I know that how to forecast wave 5? Usually it distance from wave 1, then you just cover, and this is gonna be like wave 5 somewhere around here. Okay, or you can use the projection 100% from wave 1 plus wave 3. You need to wait for wave 4 to form. For let's say this is gonna be wave 4. 100% projection gonna be where? Oh, no, not 100%, sorry, 61.8%. 61.8% projection. That's gonna be here. Okay, actually the same. If you want to do 61.8% projection, or you want to do the measurement like that, is here, somewhere here, right? It's somewhere here. Okay, so you can project this is gonna be your wave 5. If they're gonna pull back here, if this is gonna be the wave 3, if not, if price still rising, meaning that wave 3 is still gonna be longer than that. Okay, either they're gonna stop here at 200% or they want to go all the way up to 261.8%. Okay, sometimes you might go all the way up there, then it's gonna be wave 3 still continue. So we don't know. So you need to continue counting wave. Okay, this is how it look like. Okay, now this is going to be the last slide because I don't want to go too much detail. Now we're going to touch a little bit on the pullback or collective wave. Okay, for collective wave, okay, which is wave 2 and wave 4, usually it's like that. Wave 2 and wave 4 will be alternate in shape or style, meaning that if wave 2 either we call it zigzag, we call it zigzag here. Okay, and wave 4 gonna be the sideway, or if wave 2 is sideway, wave 4 is gonna be zigzag. Okay, it's like that. This is a guideline to count wave 2 and 4, which is the pullback. Okay, the guideline is really useful for potentially projecting the end of wave 4. So whenever you see, I'm not sure if I can find the example. Let me see. Okay, I actually go here. Okay, let's a quick look. For example, here, based on this this wave, I would say this is my zigzag or ABC. Just like this could be like A, B, C. Okay, and you can see the wave 2 is a sideway right here. Let me remove everything so you see, right? Like here. So in this case, wave 2 is a sideway, and then we'll see like A, B, C, sideway. And wave 4, you will see that a zigzag. These are like A, B, C. If like that, if wave 2 is a zigzag and wave 4 is going to be sideway. Okay, or something like that. All right. And somehow they're going to look something like that. Let's look something like that. Within they're going to have like A, B, C, D, E. I will cover like in the next webinars. Okay, it will look like that. This is an example. Let me see if we can find an example of gold. Maybe I'm gonna look up you go to the lower time frame and then you will see like subdivided wave. Okay, let our just start to count the wave. This is not the correct one, but maybe let me try others pair. But if you think that either way is so difficult to count, then you can just ignore this. But it's good to know, or if you want to master it, you can. But to me, I don't trade with Elliott wave, okay? Unless I want to like see the wave and then I will count. For example, let me go on a higher time frame to have a look at where should I start count the wave here. Okay, if I just want to count the wave by using this current one, 2, 3, 4. Maybe I just want to count like this is wave 1, wave 2, 3, 4, 5. Then they're going to be A, B, C. Maybe pull back. Let me see, okay? Let me see. Let I call it the wave 1. It's gonna be like wave 2. It seems like wave 2 somewhere around here is like sideways. And then wave 4 somehow is gonna be like the zigzag. They're gonna be like zigzag here. Okay. And then this one might be like, I'm not sure, they might be like A, B, C. Or in the bigger picture, like just now we will mention this could be your wave 1, maybe wave 2, 3, 4, 5. If I want to continue to go uptrend, okay, we can go to H4. Okay, within this one, they're gonna have like smaller like A, B, no, 1, 2, 3, 4, 5. For A to B, they're gonna have like A, B, C. I will cover that like next webinar, but it will look something like that. It will look like that. Okay. So if I want to like count like this, and then I don't think this is gonna be pullback. So if I were to count, this is gonna be a wave one, complete a wave one, and wave three, wave two, a pullback. That's gonna be somewhere between this level or somewhere around here to get something like maybe maybe A here or A here. Okay, and then continue to go 3, 4, 5. Okay, or we're going to see the pullback. So then you need to start to count again if I'm wrong. Okay, but this is what I can see right now. Maybe they'll continue to go, even see go a bit longer or here. Okay. Okay. Any questions? So this will be end of the Elliott wave today. So I have 15 minutes for you guys to ask me question about Elliott wave. There will be much more to learn. Okay, that's why I split into 3 parts. So now open question Q&A session, guys. A lot of people sending the spam message in. Yeah, so just ignore it. Okay, open question. Any Q&A? Any questions? Or you guys good to go? Okay. The question is, what is the curve at the bottom part of the graph? Oh, you mean here? Is this here? You mean here? You mean indicator? Is it this one, the blue color one? Yes or no? Oh, it's not just indicator, it's RSI. Okay, I think I did not open. It's a RSI here. It's RSI default setting, RSI. Okay, I share with you guys indicator that I'm using is only RSI, okay, and Fibonacci. Okay, that's it. That's all. Okay, somebody raise the hand. What you want to ask me? You can just type in your question. Turan, is it Turan? Your name? Turan Chandra. I saw your put hands up. No question? Are you still with me? Okay, I think maybe he accidentally raised hands up. Okay. This question say that initially EUISD show resistance support level, how to show them? Just like what my key level, okay, I just remove because we're not talking about support and resistance. If you have nothing to ask about Elliott wave, and then I will just maybe highlight the key level for you guys. Okay, so basically this is my key level for the I identify the key level myself. So this first resistance for not for Elliott wave, for EUISD. Okay, for EUISD. What wave is the best to trade? You trade wave 1, 3, and 5. That is a follow the trend because wave 1, wave 3, and wave 4 follow the trend, and wave 2 and wave 4 is a pullback. So they say that trend is your friend. They say that. So you trade wave 1, 3, and 4. And let's say that if you were to count until wave 2 pull back already, and then you might pull back, then you can buy to complete the wave 3, which is wave 3. You can use the Fibo extension to forecast because wave 3 usually will go up to start from 161.8 up to 200% or 261. Sometimes it could go up to 361.8% Fibonacci extension. Okay, if you want to select one wave only, which one it will be? Wave 3. Wave 3. If you want to pick, I will pick wave 3. Because wave 3 usually is a external wave, it's a longer wave. So let's say if I want just to trade, and then I will count that maybe from whatever that I can. I don't know why I cannot use the pullback, like the pullback. For example, if I just want to buy the call from here, it will call this wave 1, this complete wave 2. For example, I'll use Fibonacci and I will say, oh, Fibonacci at 61.8%. So you want to call wave 3, or at least my target, you want to buy from here. My target is where extension is gonna be where my wave 3. It might take profit if I want to buy at wave 2, pull back at 61.8% just now here, right? And then this is my target, complete 61.8% wave 3, right? This continue to go wave 3. Now pull back wave 4. How you gonna count wave 4? So from wave 2 to wave 3, you can see that retrace, let's just say 30%. This is gonna be your wave 4. And now I'm going to forecast wave 5. Wave 5, I'm going to get a wave 5 here. Either I'm going to use the protection from wave 1, 3, 4, meaning that it's going to be here, wave 4, right? Wave 5, but price did not go up to here. Or I can use the distance from here, and then I copy and then measure here. It's almost the same, right? And then price did not go to that wave 5. I mean, I not go to there. They just go to maybe like kind of this resistance. Then kind of after that they make a pullback. So I would just say, okay, this is the end of wave 5. If I want to just count like 1, 2, 3, 4, 5 like that, okay. And then if I want to count like that wave 5, you will see the pullback. No, meaning that I'm counting wrong. But if you just want to like, first I want to count, okay, price pullback 61.8%. If I want to go to wave 3, and then I will go to 161.8, that is my take profit. And wave 3, 4, 5. And then you will see that by right, I'm wrong. Okay, but there's so many ways for you to trade. Mostly I trade wave 5. Okay, you say that mostly you trade wave 5, meaning that you wait the wave 5 to complete and then you see the pullback. I short after wave 5 we band this divergence. Thanks for your insight. Okay, meaning that so meaning that now is let's say BTC, you were talking about divergence right now. Are you short BTC? To me, this is going to be the wave 3 and wave 5. I saw the divergence, so we short BTC. You short BTC from the monthly time frame. Yes, yeah, and then happy for you as well, right? Because now I will see that in BTC, it's the end of wave 5. In monthly time frame, our story is going to be wave 1, 2, 3. Wave 3, smaller wave 5. We saw the divergence here, and then you sell. Okay, you sell BTC. And talking BTC here, you'll see that they already create your supply zone. Now we combine with other technical that I like share with you guys, right? So I'll still buy as I sell for the BTC as well. Okay, the tuner say, I mean, when I see complete wave 5, I think that wave which I take 90% accuracy. Okay, so basically just wait for wave 5 to complete. So where is your entry? You did not trade from wave 1, 3, 4, 5. You wait for wave 5 to finish and then you sell. That's quite long unless you hold or you buy since wave 1 or wave 2 and then you hold up to wave 5. Because if you wait for wave 5 to finish and then you sell, it will take quite a long time. Or you trade like using others strategies. It's nothing wrong if you hold in like wave 2 and then you're gonna count wave 3, I pull back, I buy again, and then I hold to wave 5. That makes sense. Okay, turn say completing wave 5, and if it's break wave 5 trend line, that where you sell trend line. You mean trend line or you're talking about the channel? Actually, if you trade, right, you can use the channel to make it the guidelines. This one, maybe go to weekly. You can use the channel to make it within the listen. No, I think this is not a good example. I go to go. You can use the I think EURUSD. Either you can use the channel. Okay, able to see like that based on the channel. Okay, I might like just might count wave 1, wave 2, maybe wave 3 could be here, wave 3, and maybe wave 4, something like that. Okay, somewhere around here. If you want to use the channel, you can use the channel to trade elevates as well. Okay. Any questions? Five minutes to go, guys. If not, it seems like it's going to break the my key level is still the same for the EURUSD. This is again, I just highlight the key level and I'm going to end the webinar very soon. This is our put intermediate support level, which I will monitor. So basically, for the EURUSD, H4 time frame price just ranging, okay, or sideways. Last question, guys. No question. Okay, let me highlight the key level for EURUSD and then I will end the webinars. Okay. Either I will say this is a price just ranging. Okay, sideways. So we just monitor this level. Okay. And the last one is you captures already. 1, 2, 3, 4, 5 captures. Okay, done. I'll do gold. Gold price was at the resistance is still the same. Okay, this is second resistance. This was the first support. This is second support. Okay. Okay, guys, that's all for today, guys. Thank you so much for joining the webinar. So again, guys, every Monday, I'm the one who do live trading section. I think last Monday, I did not see you guys join the webinar. So if you have time, please come and join the live stream section. So you can request if you have specific instrument you want me to have a look for you or highlight the key level. I'll be doing that on every Monday, and Wednesday I will doing education section. Okay. All right, guys, please come and join next webinar on Monday live and next Wednesday for part 2 for Elliott. And thank to Talun's, okay, for your question, and we can discuss more about Elliott as well for the next webinars. All right. Yes, you. I know you was there. I saw your name yesterday. Yes, you was there yesterday. Okay, I like your I like very much your session. Okay, you're welcome. All right, guys, that's all for today. Thank you so much. See you guys again next week. Good luck to all of you guys. Take care and bye for now, guys.